Hey, what's going on, guys? It's Will. Hopefully you're having a great day today. In this video, we're going to be going over the top 3 music stocks to invest in October. Hopefully you guys enjoy. Now, before we get into it, for those of you guys that would like to surround yourself with other traders and investors and business-minded people, I would encourage you to click the first link in the description. You can join our free group. And then for those of you guys that would like to work with me on a close basis and invest with me every single week, we have StockMate, which is our second link in the description to get started. Let's get right into it. So these 3 stocks are stocks that one is already at a point where it may not be a buy, and the other 2 are ones that are undervalued. But the reason we include that other one is so that you have some that you can look forward to in the future. Now, the first one that we're going to be going over is Spotify. So Spotify is one of those stocks that we've seen grow tremendously over the last year. One thing to consider is a lot of artists and a lot of labels have been really dissatisfied with the pay of Spotify. So fundamentally, it's been getting a lot of backlash. But if we look over the last year, we've seen a tremendous 134% growth. And a lot of this growth is because they increased the amount that it costs for their subscriptions. And the other thing that they did is they changed the amount of money that they pay out to artists and podcasters to be less. So in the past, they've made it to where as soon as you start getting views or streams, you will get a certain amount of money. But just recently in this year, they actually made it to where you don't get paid for the first 1,000 views or streams, and you only get paid after that. So that actually has saved them hundreds of millions of dollars in revenue. However, if we look at the fair value, so this is a research report that is based on some of the most reputable firms in New York. You can look at the report and it says the actual value of what they believe Spotify to be worth is $250. However, its current stock price is $365, which is far above what the fair value is showing. The reason that I include it in the top stocks to take a look at is because they are consistently beating their earnings. So they are making more money from their company in their profits than what is being expected. So although the fair value is below what it's currently valued at, you can see there's more increase in value of hedge funds that have recently purchased Spotify. It's a 72% buy rating based on 39 analysts. And what this means is essentially this stock is showing promising growth. And even at its current price, it may be one that you want to consider. I would wait for, a pullback of sorts. I would look for Spotify to decrease in value. If we look at the year to date, it's having higher lows here, and higher highs. So it's growing. However, its last low was around $324. It's currently at $365. I would look for a pullback into this range of $320 before I would consider buying Spotify stock. I don't currently own Spotify stock, but that's the way that I would approach it. Now, the other stock that we have, let's see. Before we move on, is there anything that we should include here? One thing to consider about Spotify is that they recently had a forecast view that was increased. So Goldman Sachs, they're predicting that they're going to see a lot more growth in Spotify. Part of the reason why is because Spotify is shifting its attention towards content. You might see more videos on Spotify. You might see more engaging lyrics, and they're using AI and they're approving AI on their platform. So they're kind of on the frontier, right, of what we're seeing with the content creation video and audio. And so that's one of the reasons that we've seen Goldman Sachs see them fundamentally as a good buy. Technically, and aside from their current growth trajectory, financially, how they look is that they've had continued profitability growth by increasing their prices for their subscription, and they have decreased their costs. They had some layoffs during COVID that they're still sustaining with a lower workforce, and they've lowered the amount of money that they pay out. So they're able to keep more. That's why it's a stock that you'd want to consider looking at as an investment. Now, the next stock we're looking at here is Warner Music Group. So Warner Music Group has been on a pretty consolidated pattern the past 5 years. You can see it's only gained 13% over the past 5 years. But just recently, in the last month, we've seen it gain 10%. And the reason that it's interesting is because if you look on the 1 year, you can see it was consistently decreasing in value, lower lows and higher or lower highs, down to what seems to be, kind of a floor. You can see right around $27.50. There's $27.50 on August 5th. It pushed up, then came back down to $27.50, and then it went back up to around $30, and then came back down to, again, $27.50. So it's established a floor right around $27.50, and that's showing promising growth, a promising reversal. So what we can see is it recently pushed up about 10% to $30 again, and now it's pulled back on the last week about 4% down from that $32 mark, and now it's at $30.75. So just looking kind of on the 1 year, you're seeing that on average they've usually gained each year, but they're down about 5% on the year, so they're a little below. You could also see that there is a trend that started happening on the October in 2022, right around $22. So you can see $22, and then in 2023 it found a support at $24, and then now it's just found that support right around that 20 the 27.50. So just looking on the 5 year, you can kind of see this trajectory of we might see it push back up to this previous $35 levels that we saw in early 2024 and in 2023 and 2022. So those levels are something you might want to consider. If we look at the analyst ratings, it's a 60% buy. And if we look at the hedge funds, they've recently had a large hedge fund purchase. However, on the insider trading, you had an executive or someone that's high status in the company of Warner Music recently sell almost 1 million shares of stock. So something to look into as far as insiders. Never a really good sign that you see insiders sell a lot, but in that same month, we also had a hedge fund that purchased almost 8 million shares. So much greater purchase than what the insider had sold. Same thing with Robinhood. We saw a lot of people, 93% net buy on Robinhood. And then if we look at the research reports, the fair value is $37. So as we mentioned earlier, currently at $30, we're seeing that it could reach that $35, $37 range. And that's exactly what analysts are saying here as well. And if you read the full report, something I noticed was kind of their economic moat. They have somewhat of an economic moat because they have this a huge artist base, and a lot of their artists that they have in their portfolio are some of the greatest and biggest artists that are known. So when you have catalogs of some of the biggest artists in the world, that gives you somewhat of an economic moat, right? You have a monopoly of sorts, right? We have the big three. We got Warner, we got Universal, and we got Sony, right? And so Warner is one of those in the big three that has a pretty big grasp on the overall music market. Now, if we look at the earnings and how it kind of looks, they're predicted to have an increase in earnings. If they hit their quarter four earnings per share, it's going to be a lot of hype. They're going to have a lot of hype because currently they've been meeting their earnings per share. They were above in quarter four 2023. They were down in quarter one and quarter two. They met their earnings per share in quarter three. And now on this in November coming up, if they are to meet that expected earnings, we're going to see most likely an increase in value in their stock. But yeah, so looking at them, just from a glance and not heavily diving deep into their fundamentals, we're seeing some upside potential from $30 to $37. Past that, we'd probably have to see a break above $40 before we may see a rally up to that $50 mark. But that's not something that technically would make a whole lot of sense. We see that realistically, we could see it hit $35, $37 in the next few months, which, if we're looking at the profit potential there of what that would mean, it's about, 25% gain. So quite a good gain. Over the past year, I've grown my account by about 65%. And part of the reason why is because I focus on these 20 to 30% increases. And so that's something I would encourage you to do, is really look at, what's going to give you, that 10 to 20%, 30% gain or more that you can manage your risk in, and that you can buy and see that you have much greater upside and confirmation of that trend than moving in the direction of something that may or may not, you're not really sure. But yeah, just based on all the data there, that one looks pretty good. The third music stock is Live Nation. Live Nation is on a huge uptrend over the past 3 months and really the past month. We've seen 17% increase. Right now, it's one that I've been asked a lot to review, and the reason that I chose it is because of the grasp that they have on the ticketing world. They have a very growth-oriented business model right now. They have a big social media following in their Live Nation pages, but they also have a lot of ticketing deals that they're doing with some really big artists. And so let's take a look here at what it kind of looks like. If you look on the max time, right, all the way back to 2020 or 2005, we've seen it grow just exponentially, right? 5 year, they're at 60% gain. If we look on the 1 year, it looks like it's a little overextended. Looks like we could see that here's a top, here's a top, here's a top, and here's a top. Right now, it looks like it's at a top, and it's most likely going to decrease in value over the next few weeks to months. And from there, you look to buy somewhere in the range of $89 to $95, and that would be probably a more attractive purchase price than what it's currently at. But it has some consistency over the last year, even the last 5 years. It's steadily upwards. So it's one of those stocks that we're including. If you look at the news around Live Nation, there's some antitrust stuff going on. A lot of companies and artists and labels were really upset about the fact that an artist will come to a town to perform, they'll sell their tickets, and then what happens? People buy the tickets, and then they sell the tickets for way more than what the tickets actually cost. And so this is a problem that's happening with this company, is that the judges and the court system is currently evaluating if it should be legal for people to resell tickets, because essentially people are buying tickets and selling them for 10 times more than what the ticket costs. And it's making it difficult for families and true fans and people that just want to enjoy the music, be able to buy and be able to enjoy the show. And so it's something that's a focus right now. However, if we look at the 24 analysts that were analyzing the stock, we could see 83% of them are saying that it's a buy. So what does that mean? Well, they're fairly bullish on the stock. And looking at the purchasing recently, we had more insiders buy than sell. And we recently had a dump off in hedge funds back in Q1. And it's been pretty even here in Q2. Robinhood, they've had a lot of retail investors sell recently. And essentially breaking down kind of what the bulls say and then kind of what the bears are saying. The bulls say greater contributions from venues, sponsorships, and advertising give room for significant margin expansion. The bears are saying artists have too much leverage over Live Nation. Despite their recent good times and the contribution from venues, Live Nation will run out of other areas to squeeze out profits. Eventually, they're saying the concert margins are low and a lot of artists are going independent. So, fair value is 105. If you look at 105 as the fair value, it's really just about at that. It's at 110. So maybe not, like I said, the best purchase right now. You may want to look in that $80 to $95 range if you're going to purchase Live Nation. I'm not extremely bullish on it. That's why I have it as number 3, because the uncertainty is pretty high when it comes to whether or not they're going to succeed. A lot of artists are going independent. They're going direct to the venues. And while they have a large signing and label base, we signed a song in the past. My wife, she signed a song. She's a singer to Live Nation. And we never even heard the song published online and didn't really see much of it. And so I don't know if it's an executive problem, but I've also heard of a lot of people signing with Live Nation and then not seeing anything happen to the music. And so it seems like maybe they're not having the best processes and systems as well inside of their company right now. So earnings wise, and that's just what I can say from seeing firsthand. Earnings wise, it looks like they have a positive earnings. They're expected to be right around $1.71 here in October, Q3. They're just about to report their earnings. If that goes well, obviously they could push up a little bit more. But again, I see it to be pretty overbought at this point. Probably wouldn't consider purchasing this right now, but I would wait for a pullback and maybe find it somewhere in that $80 to $95 range as a nice purchase price. So as always, guys, the best investment that you can make in anything is going to be in yourself. And if you're learning how to invest and you're getting into the markets, then the best way that you can really start to level up is to increase your knowledge and get the skills you need to get to where you want to go. So if you're someone that is, just getting started, maybe start with small amounts, focus on the percentage gain. Don't focus on trying to make a huge buck just by buying a stock and it's going to flip. Obviously that does happen, but it's like extremely rare. And the more common way that you're going to make money is finding real value in the markets and investing in it for something that you could see as a foreseeably good investment in the future. For those of you guys that are interested in surrounding yourself with other like-minded individuals that are investing in the stock market, I would encourage you guys, again, check out the first link in the description or the second link in the description, and I would encourage you guys to simply take a look. Thank you guys so much for watching, and I'll see you in the next video. Peace out.